Hello, good morning. It's Wednesday the 14th. I'm FX Blue and this is the market brief. So the partial lifting of lockdown has already proved that there's still a place for bricks and mortar retail in the UK. We've had reports of Christmas-like takings from the high streets as stores have struggled to keep up with demand. But the expectation is, of course, that the initial surge will level off in the next few weeks as all that pent-up demand is slowly satisfied. But naturally, having so many more people out and about has raised concerns about a potential uptick in COVID cases. The data will need to show that that's not the case if the next stage of the roadmap can take place next month. Boris has been on. He was keen to emphasise that the drop in the COVID data has been more due to lockdown, the success of lockdown, than the vaccine rollout. It sounded to me like he was hedging his bets in case he has to tighten restrictions again if the data does tick upwards. Andrew Haldane was also on. He announced that he'll step down as the Bank of England's Chief Economist after the MPC meeting in June. Now, he's often voiced concerns about the impact of negative rates as that debate continues. He's confident that the support and stimulus that's already been injected into the economy should be enough to see us through. Meanwhile, in the market, sterling continued a rather sedate performance of late. We traded between 137 and 137.70 against the dollar yesterday. US data confirmed inflation is beginning to pick up. Headline inflation rose by 1.6% in March. That was the highest rise in almost 9 years. But the year-on-year figures were distorted by record low inflation that we had a year ago. This has, however, confirmed concerns of many in the market who feel that there will be a need for action from the Fed more than the reassurances that we're having as inflation starts to creep up. The main concern is around how high the Fed will allow inflation to go, and then when we do reach a level that the Fed is uncomfortable with, what tools will be available to address it. Step up, Powell, it's your time to shine. While the Fed remains dovish and supportive towards the economy, though, we can expect the dollar index to remain under a little bit of pressure. Yesterday, euro-dollar broke through resistance at 119.20. We went on to touch a high of 119.55. And we opened this morning even higher. We crack on this morning at about 119.70. Right, that's it from me. Have a wonderful day and do join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.